This ETF Minute is sponsored by CI Global Asset Management. This video is for general informational purposes only and not personalized investment advice. This is the ETF Minute on In the Money with Amber Kanwar. Today we're talking about the CI Global Infrastructure ETF, ticker CINF. To help us do that, we've got Kevin McSweeney. He's portfolio manager and lead for Canadian equities and global infrastructure at CI Financial. Kevin, thanks so much for joining me.
Thank you, Amber. Nice to be here.
So let's talk about this ETF, the characteristics. Why does somebody need an infrastructure ETF in their portfolio? Is it defense? Is it offense? Tell me.
It's defense without compromising on returns, to be honest. It's been a solid returner, but it is defensive because you're talking about the fund is populated by companies, pipeline companies, utilities, telecommunications infrastructure, and transportation that have very strong cash flows, very strong moats, and are not exposed to the ups and downs or volatility of consumer spending, less exposed to global economic fluctuation.
I wonder, though, is this sector going to be hurt by reduced government spending? I mean, they certainly benefited from this massive stimulus, particularly out of the US. And now, with Doge, they're looking to reduce spending.
We do have a little bit less exposure to the engineering and construction companies or aggregates that are in there. And so when you think if a government was going to stimulate with a road, by building a road, that would actually take away from our toll road exposures. And so the pullback in government spending, first, removes a competitor, but second, to the extent that that might create economic weakness, we do tend to have some sectors in here, utilities and telecommunications infra in particular, that benefit extremely strongly when interest rates are headed down without their valuation goes up without their cash flows coming down.
So let's talk about how the fund is structured to capitalize on some of those trends.
Sure thing. We refer to the sectors within the fund as PUT. Pipelines, utilities, telecommunications, infrastructure, as well as transportation. So pipelines are about 20% right now. They've had a good trade with the whole drill, baby drill, or exports, and a good energy tape. That's about 20% of the fund. Utilities are about 45%, extremely defensive, benefiting from electrification, benefiting from increased power demand. Whether data centers are as big as people say, we don't know, but utilities will be around. Another 12% are in telecommunications infra, such as cell phone towers and data centers. As well, about a quarter is in industrial infrastructure, transportation, ports, toll roads, airports.
And it's actively managed.
Very actively managed, high active share. And we certainly make our views known on both the sector and the individual security prices we're dealing with.
Well, let's talk about some of those individual securities. Can you give us some examples of stocks that exemplify the thesis you're talking about?
Sure. I'll do one global and one Canadian, perhaps. So one of the ones we love overseas is it's called GetLink. They operate the Eurotunnel that goes between London and Paris. That is a very monopolistic, very high barriers to entry to build something under the channel. And they have that concession for an extremely long time, just getting a flat fee for every passenger, not worried about, whether they have to stimulate more passengers with extra tickets or things like that. They have, and truck shuttles as well. We also like, closer to home, we like TransAlta. That's an Albertan utility that I think is world-class in terms of its exposures, in terms of its growth, and in particular in terms of its valuation. It's come off a little bit recently just because it had been a hedge fund favorite on data center trades, trading an extremely good valuation right now, and we're happy to hold a good size position in it.
Kevin, thanks so much for joining me.
Pleasure. Thanks, Amber.
That's Kevin McSweeney joining us from CI Financial. To learn more, go to www.cifinancial.com.